Hello and welcome to another exciting edition of Rate Desk. I'm your host, Michael Thomas. Today is Friday, May 8th. Here to talk about multifamily interest rates, among other news. First, let's go to the markets. The major indices are up, and the NASDAQ is up for the fifth straight day. That is positive news there. Crude oil futures remain range bound, again in that $23 range, and U.S. 10-year Treasury yields are slightly up. They are slightly up. 66 basis points is the range they're trading at today. Zillow has the largest cash balance on their balance sheet that they've ever had in the company history. Well, that's positive. That's nice to hear. And that leads into our other good news. FHA rates are slightly lower today. The 223F quoting at 2.50. That's right, 2.50 fixed for 35 years. And on the 221 D4 interest rate, you're not going to believe this one, quoting at 3.15. That is 315. Folks, that's a 40-year fixed rate, non-recourse construction perm loan. That's nuts. Anyway, just thought I'd say that. Agencies are flat today. Fannie is quoting at 315 on a 10-year, same as the 40-year FHA construction loan. But on a 10-year, Fannie Mae DUS, 315. Freddie Mac is still range bound in that 320 to 335 range. And as I mentioned in a previous episode, if you recall, Ginnie Mae did issue some relief for mortgagees that deal with the Ginnie Mae securities. There are methods now for them to get some relief on the principal and interest payments that they are required to make to investors under the Ginnie Mae agreement. There are some mechanisms now for them to apply for relief, particularly if there are foreclosures or things that are occurring or forbearances in any of their properties that they're financing. Then they can apply for relief with some of these methods Ginnie Mae's offered. That is good news. Better news than that is that by and large, May is on track with rental payments over 80%, according to a recent study of May rents have been made. That is solid. That is good to hear. That means even in times of economic disruption, like we're experiencing, the bulk majority of folks are making rents. Not that they're not exceptions to that, obviously, but the bulk of them are, which brings me to another point that in times of turbulence like we're seeing, when the stock markets are up and down and uncertain in a lot of ways, real estate is still a very sound investment, very predictable in terms of cash flows for the most part, even in times of economic distress. People got to live somewhere, and rental housing is still, by and large, the most affordable option out there for people when it comes to housing. So again, just a plug for multifamily investing and multifamily housing as a stable investment in these times and in this market. And I'm going to go ahead and end on a positive note with that for this week. Thank you for tuning in. It's been another episode of Rate Desk with your host, Michael Thomas, signing off.